Hello, everyone, and welcome to another episode of the Reinsurance Podcast. I am your solo host today, Jerad Lee, but joined by my doppelganger, Alex Bond. Welcome, sir.
Thank you very much.
You've worn glasses to differentiate yourself on camera. I appreciate that.
Well, it's because I knew you had some good quality camera footage. I've gone for my most sophisticated version of myself today.
We've also worn almost the exact same jumper combination. Ben Rose would be thrilled about this jumper conversation. But Alex from FinPro, Search Partners, like a recruitment firm focused specifically on Insurtech, reinsurance, this whole space. So right exactly in the space that we like to talk about on this podcast. So super excited to dive in here. One of the things we talk about a lot on the podcast is talent more generally across the industry. Mm-hmm. And I think you probably have a front row seat to that better than most around what's attracting or potentially detracting young talent from the industry, and as well as how we think about people who jump around in their careers. I'd love to kind of get a background quickly as to how you landed where you are now. You're obviously ex-industry like we are as well, so a bit of background there, and we can then sort of dive into where this conversation takes us.
Yeah, great, thank you. And I think background's important because we have to give context, and I'm well aware that recruitment is not always the most welcome person in the room. Certainly if you turn up a conference, you say, well, let's have a meeting and you work in recruitment, and those meetings end pretty quickly. So for context, yeah, I've been doing this for 17 years, and prior to that I used to work for RSA, the carrier. And I think it starts there, my journey talking about talent, because I was told as a typically cocky, arrogant graduate that this role that wasn't that senior was something that they could see me doing in, I quote, 3 to 4 years' time. Now, when you've just done 3 to 4 years worth of study, to be told you're going to be 3 to 4 years before you get something that you think you could probably do tomorrow is really quite challenging. So I don't think we're very good at managing talent and that's a long time ago, but I don't think it's changed dramatically. So, but the rest of my career has been in search or recruitment, all in the insurance industry. And for the bulk of that, up until about 4 years ago, was traditional carriers, brokers, underwriting talent internationally, but bias, obviously, being based in London, sort of UK. Started to branch out into the US via kind of Miami, because we were doing a lot of that work where there's a lot of relocation to open up the LATAM market using people from Europe. And then now, FinPro Search Partners, I quite often say we had the Jerry Maguire moment where I did 4 searches for offshore energy underwriting talent in the same year, all for carriers which had AAA rated paper, all paying the same money, all basically the same remit, and I just felt disingenuous having the same conversation with the same talent, because the talent pool's so small in most of insurance. So ripped up the rule book, decided I was going to enter into this InsureTech world, and I was only going to work with InsureTech. So that's what we do today. We're a niche firm. There's 5 of us, 1 in the US, 4 in the UK, and we only provide senior level talent for InsureTechs, and InsureTech adjacent is now the term that we also throw in there as well.
Yeah, fine. Well, and it's an interesting space because, as you alluded to, the expertise is super important, and I think especially in leadership, when you look at fintech and then InsureTech specifically as verticals, there needs to be, it's a different pool of talent than what might be really interesting talent for any number of technology companies building AI software, social media software, whatever that might look like. So there's that sort of same finite pool of talent of which you're kind of putting your finger on the pulse of who is doing interesting things, who are the people who are in underwriting or broking roles who have a skill set that's transferable to the startup ecosystem. But that can be a transition that some people struggle with, I think. Right? I think there's this InsureTech, as many startups are, is super sexy, right? And as a result, everyone who's in there sort of very tedious at times, oftentimes very exciting, but at jobs that can be tedious from time to time, and they see the sort of super exciting startup world just adjacent to where they work at a big carrier, at a big broker, they have these ambitions of sort of jumping into that space. What are the things that you find make people make that transition successfully, as well as people who sort of leap into that and they're not equipped for that universe? They might think they are, but in reality, they're much better suited for a 15,000 person organization with 25 people supporting their IT function, et cetera.
Yeah. It's a great question, I think, and it won't be a huge surprise. I think the things that make it successful are a mirror of the reverse of that, where people that do fail. I think the things that people can do to prepare themselves. I mean, one of the things that I ask people, if I'm trying to attract someone from the existing incumbent market, let's say you've worked for a carrier for 10 years, you're a successful underwriter. What have you done about InsureTech? And what I mean by that is, are you reading up on it? Are you trying to go to events? Do you listen to excellent podcasts like this? And, you know, joking aside, have you shown an interest in it? Because I think the awareness of the size and scale of these businesses, they're much smaller, they move faster, they present themselves in a different way, is very, very important. Because really, you're talking about an assimilation of culture. It is a different culture. If you know, I think when I first launched InsureTech specific search, I went with a search sort of pack that I would go to a big carrier with. Well, that had a timeline of when are you going to complete the search? Well, 12 weeks. You turn up to a VC-backed InsureTech in the US and you go, okay, we're going to take 12 weeks to find you this one person. They think you're crazy. Like we'll burn half our stack for, you know, that time. So, but that was I didn't have enough cultural reference there. So I think people can start with a cultural reference point. I think as well is doing your homework. And I say this to people looking to employ people from that world and vice versa, is to say, what are things like salary and compensation packages? Because if you start trying to make that transition, you expect everything to be like for like. I mean, the amount of really disappointing conversations I have with people going, oh, they haven't got as good health cover and they haven't got as good pension, and they don't have as good bonus. It's like, nope. And no, they don't. And unless you prepare yourselves for that, then your head is in the wrong space. So all of that is kind of fairly good housekeeping for someone to do. It's like, look at what's out there, advertised roles, look at what's out there from a kind of content perspective, so you can kind of see where the differences are and try and identify with yourself, does that resonate with you? You may be someone that wants to walk around the Lamb and, you know, Lloyd's and Leadenhall Market. That probably doesn't fit with a startup. So I think the cultural gaps are bigger. Then, you know, it's trying to get involved in projects that already put you outside your comfort zone inside your organization. And I think that's what people don't utilize enough. You know, there are two sides to InsureTech. One is the InsureTech companies themselves. The others are the people that marry up with that inside the insurance industry. So if you work for a carrier or broker, there's almost certainly an opportunity to get involved with some level of kind of technology integration. Even if you just show an interest and talk to the people that are on that team and you haven't been able to part of that project. So again, it's getting as close to it as possible, and those are the people that do well. Beyond that, I think you're getting into things like it's just personality fit. You know, I worked for my first ever job in recruitment was working for Hayes, which is one of the largest employers in recruitment globally, tens of thousands of people, all the support you'd expect with that. And then went to work for a company called Eames Consulting, which was, I think I was the 22nd employee. And I thought I knew what I was doing. And then I got stuck in this world where we didn't have the resources. I was all on my own. But I excelled, and I prefer that environment. But I think outside looking in, you would have said on paper, this doesn't fit. So it's all around culture in what makes someone successful.
I think there's being transparent up front about that transition is really important, and talking about it in the lens of like total comp or full comp, where base might be similar, might be a bit less. Bonuses are certainly not going to align with bonuses you might be getting at a underwriting or broking firm in a successful year, because those can be multiples or of salary at times. And then the same thing with things like expenses and all. Like, it's a different culture in a lot of ways, but in the trade-off, you get way more autonomy, a bunch more freedom to explore and open things up, and there's, you know, your sort of shackles are removed in a number of ways in what you're able to kind of go and explore and the impact you're able to have. So you're looking at what do you want to be doing for the next few years. If it's purely optimizing your cash upside, you actually might be better off in a big carrier or a big broker or similar in that short-term window. Obviously, if it's looking at a 10, 15-year time horizon, you get equity in startups that sort of is disproportionately high compared to those other firms. And if that company is successful, that might be something that's very, very interesting. But the failure rate is also high. So you don't want to have it where you look at it going, sweet, I'm going to work there for 5 years. They're going to IPO. I'm going to buy a yacht, and that's me done, right? So that can happen, but it's not a sort of high certainty scenario. So having that conversation where someone's going, I don't see my career going down this traditional path anymore, but I love this industry and I love what technology is going to have an impact and do here. And this is somewhere I really want to dig into. If you're a listener and that is you, I think, Alex, you're spot on. The next steps are go to the sort of InsureTech events, see what your firm is doing and get closer to those projects and those initiatives. That's very much how Ben and I did this, right? When we were at Aon, we started leaning closer and closer into the projects Aon was building, the way we were engaging with startups as a firm, closer to the ecosystem of how technology was impacting reinsurance. And bit by bit, you learn and you begin to unpack things, and eventually you become sufficiently interested. You're like, you know what, this is the route that I want to take. But it's certainly an interesting one. But if I think you guys have done a great job with that, in that transparency up front, talking to candidates and sort of going, what exactly are you looking for here? Because it's not just this other side of the grass is greener scenario. It's just different grass.
And people are guilty of over-indexing the value of their experience. And I think when you look at that, it might sound odd to be saying to someone that's got 10, 15, 20 years experience going, you need to get closer to this new industry, almost need to do a bit of kind of work experience if you can get your hands on it. Because you are almost like a new entrant to the market. You're almost like that grad. How do we hire grads? We love to be fair and transparent, but when they've all got first or 2-1s and that's your bar, then you're looking at, okay, who's actually managed to get some work experience, because that person is already a better fit for what we're looking for. Yeah. The same applies to InsureTech when you're trying to hire that senior person. If they've shown an interest and they've got some experience, that's advantageous. Because what I say to people, particularly, this is obviously, we're really focusing when we're talking about this, when we talk about InsureTech SaaS businesses, more than digital insurance, digital MGAs are insurance businesses. They just got better tech,
and a better multiple at least.
Yeah, a better multiple. It's not that helpful when talking about them, but I do understand that we draw the distinction. But if we're talking about InsureTech SaaS, if you're the insurance person, so that head of insurance role or something like that partnerships piece, once you've onboarded your knowledge, it's in the system, it's in the business, it's kind of embedded to a certain degree. Now, that's an oversimplification, but to a certain extent, that's true. Then it's like, well, what else are you going to do? And so it's that attitude to kind of say that don't over-index that knowledge base, because software businesses are really good at productizing things. So they can productize your knowledge set, it's built into the business, and then you kind of have to continue to add value. So I've had lots of conversations with people that go, I've been in this industry 20 years, I've got all this kind of experience, this is hugely valuable. I was like, yes, of course, to a point, and not to overplay that hand. The transparency does go both ways, though, and I think that's an important thing to talk about. I think particularly on that equity conversation, is that I think the days of people getting overexcited about equity are probably gone with the bubble that sort of burst slightly on the InsureTech scene. And that's the thing that I sometimes find challenging with managing clients is to say, look, I know that you are hugely invested in this emotionally, and also from a kind of, you have a huge equity stake in this. It's your business, you're a founder. Don't overplay how important that is for someone, because you can't pay your mortgage with equity. Nope. So it's kind of it's a real delicate balance of total comp reward and getting that right, and that's really, really difficult. So yeah, the honesty really plays both ways, I think.
Yeah, I think, and I'd like to circle back to that founder piece or the other side of the table there in a second, but I think that's exactly right. And equity is a really interesting one, because it matters to a point, and people want to feel like they're part of the journey. And if you have a big result, as all the companies who are being founded aspire to have, you want to feel like that part of your journey, you're rewarded for that in the payout. But it's weird because people come into it looking at it from very different angles. We've had loads of people, early in our journey who they'll have a couple of coffees with us, and like, oh, I'd love to have more coffee with you for like 1% of the company. Yeah. And you're like, you look around like they're insane, and which they are insane for suggesting such a thing. And founders, please reach out to us and ask us questions about this if you have this scenario. But like, people from the outside think everybody has 100. Yeah. I only want one of your 100. Yeah. It's like, I don't have 100 anymore. We have co-founders, we have investors, we have all these, we have the team of people, oftentimes who have way less than that amount, and they work for us full time. Why would we because they've over-indexed. Well, I can tell you all about
Mm-hmm.
how Lloyd's syndicates
Yeah,
are set up. You're like, that is nowhere near worth a whole percent of this business. So in some ways, people from the outside think that you can just give it away for free and you don't really care about it because it does matter and it is a big important part of the business. But at the same time, you're exactly right. If you have if you've built the comp plan with a huge equity incentive, and growth is slower over the first few years as startups can be difficult, that person isn't paying they're not going on holiday with his option grants. They're not buying mortgages or putting their kids through school. So whilst they might be willing to accept that early on, it actually becomes a point of friction and frustration if the business isn't accelerating in its growth in the way that they maybe optimistically perceived it to be, because they're willing to take that hit in the short term, but if that short term becomes a couple of years, now there's a friction point so I think aligning on the cash side and on the equity side in a way that makes sense is a really delicate balance. And I think from our perspective as founders and as people who come from the outside, working with search professionals and things is a really helpful way for them to level set as to what can they expect and what does that trade-off look like.
Yeah.
But going then to the other side of that table, what are the conversations you're having with the founders who are sort of going, oh, we need a insert C whatever C-suite role, or we certainly want this ex-chairman of Lloyd's to be like, what are the things that they're coming to you and asking you for? What are the things you say you shouldn't be doing that, or yeah, that's a good idea? How are you seeing that conversation develop?
Oh, that's a can of worms there. Everyone approaches it very differently. I mean, I think the expectation, it's all about expectation management. And I think one of the biggest challenges I have is that it's that founder passion. It's that why would anyone not want to work here for free? That sort of kind of attitude. And obviously that's a very extreme version of it, but there's still a little bit of people don't understand that they have to sell sometimes. And I think that's the biggest challenge. So unrealistic expectations will be, for example, we want a C-suite exec to come in from the insurance industry and plug into our 4 or 5 man startup. So that's very difficult to achieve. I think people want to, as well, quite often get some sort of fractional individual to do that. And I'm not saying that's not a good idea. I think sometimes that is a really good idea. I think if that has a functional application, if you're developing product, if you're developing tech, but if you're kind of building longer term relationships with the industry, for example, to either build partnerships or sell, I think that's quite difficult to do.
Yeah.
Because that person's building relationships and they may disappear. So I think those are the conversations we have. And then there is this thing that we've sort of touched on briefly before we hit record, which is about desperately attracting very senior individuals from the insurance industry to come and give kudos, credibility, or connections into the InsureTech industry.
Yeah.
I think that's where it tends to go horribly wrong, because it's such a huge outlay, and it's, are they getting value for money?
Yeah.
The obvious thing I would say in the search is that the other side of that, people try to be incredibly cheap about it, and it's the what's the saying, buy cheap, buy twice. And that you see that more in talent and talent attraction than in any other industry.
Yeah, I think certainly you mentioned the over-indexing on expertise. I think there's a huge failing of people who over-index on black books and network, right?
100%.
Like
100%.
I want to hire the ex-CEO of AIG because they know everybody in the market.
Yeah.
And they make a handful of introductions, a couple of those lead to follow-on introductions, and the person's not a closer or a deal maker, and so you realize they can get you into rooms with stuff, but doesn't actually push stuff along. And in reality, they might still be protective of their own reputation, so they're not going to put their entire brand on the line to help again. I think it's the greatest business ever on the planet, right?
Yeah.
But they might look at it as just a thing that they're currently helping work on or similar, right? So you have this appeal of, I'll bring this person on because they know everyone. I'm going to bring this ex-senior broker on because they know every cedent in this entire region. They may very well do, but they're not necessarily built to sell the product that you have. And are there people who are better positioned for what you're trying to achieve. The way we think about it as a firm, and I know some other startups as well, but looking very intently at like what problem are you solving for? If you're solving for access to markets and people in a certain region, like whilst that executive with a big name and a big logo behind them might also know everybody else, are there other people in the region who might be similarly well connected but are younger, have a different hustle, and have a different approach to it that is a better positioned for what you're trying to achieve? I think we get distracted by that. On the investment side, the conventional wisdom a decade ago or 8 years ago was like these advisory boards, like you could put like people on there and everyone's like, whoa, they know who, X, Y, Z. But in reality now, investors don't really care about that at all, right? If you roll out a pitch deck to investors, you're like, look at my advisory board.
Yeah.
No one gives any shits about that advisory board. But it seems like it feels like it matters, right? And as a founder, you're giving away equity. People sit in this advisory board. Like that is a horrible decision, right? Not only are they not able to move the needle in the way that you might hope that they will, it actually doesn't move the needle on the investors that you think that it will either. So also be very wary of that kind of trap.
You're speaking to a live pain of a certain going through. Yeah, I want to chime in because a lot of what we do is, because we do the InsureTech space, a lot of what we do is go to market. So we do a lot of senior leadership into business development, marketing, customer success. It's a huge part of what we bring to the table. You've built this software, you need to get it out to market. So when we do that internationally, the black book phenomenon is a huge thing. And all I say that black books bring you is a really big expense bill. Because you're absolutely right. They will get in the room. But it's the same advice I give to people when they've unfortunately been made redundant, when they're quite senior and they know lots of people and they do the right things and they network. And I'm always kind of saying, be really wary of wasting your time, because there are lots of well-meaning, polite people that want to take a meeting with you, but there's no role there. The same is true of people coming in with making introductions. They're making introductions, but they're just introductions. That's all they are. And software, particularly in software sales, it has a structure, and that's very different to the way that you close out an insurance contract. And it's not sold in the same way. It's not sold with the same level of structure or skill. I've said this a few times. The biggest gap actually in selling in between software and kind of insurance is there is a lot more structured learned behavior in selling software, and there isn't as much in insurance. It is a relationship driven business. So I think culturally that is a huge misalignment there, which people really want to overlook. But the advisory point is really interesting, and the one I was kind of referring to is that we've got an advisory board who are interviewing candidates for part of the process. Now, if your advisory board doesn't raise any issues or questions with candidates, then they're not, quote unquote, doing their job. And that's what I tend to find is if that's the process, then they create friction because they're sort of justifying value. And I rarely see it being a positive experience. And actually, it tends to be moderately hostile to the candidate base. So I'm not saying don't pull it outside advice, because if you are trying to hire your first marketing person and you know a marketing senior person that you can trust, it's great to get them to interview them. But it's more on that basis rather than getting your advisory board to do it for you.
Well, and I think if we're going to think about the thing you're trying to solve for, there are loads of people, if you have that network of people who just do that for free. Like call up a friend of mine who knows the market space. Go, listen, I'm looking to hire this role. Could you have a call with this individual? You don't need to formalize it. And the other thing that founders can accidentally fall into is this trap of creating structure where one doesn't exist. If you create this big advisory board that you then need to have a purpose for, so you arrange these advisory board meetings every month or every quarter, you prepare for, and is that the best use of your time? Or are you trying to make a space for value to be created that isn't organically happening there? And sometimes that might be the case. The other one you mentioned on like a fractional role, again, I think there's loads of examples where that makes absolute sense. If you're building an MGA and you're gonna have a syndicate paper, and you have this fractional person who can come in, who's been a CFO for a syndicate and can help you prepare all the Lloyd's file, like brilliant. Hire that person on a fractional capacity, because that's exactly what you're trying to solve for right now. But bringing on an ex-CFO from a big carrier because you need a finance person, you're better off just finding a finance person who's come from another startup who gets SaaS,
Mhm.
right? This
Mhm.
like it's a real clarity around what you're trying to solve for. The other one you mentioned on the sales side, I got this advice really early on, which I think is really pertinent, especially in our space. But like, if you take the best performing salesperson at like Salesforce, or like Databricks or whatever it might be, that person is not going to be a successful salesperson necessarily at your 5-person startup,
No.
because they have a massive brand, they have a mountain of collateral, they have an army of marketing department teams, the huge sophisticated engine that's driving this, of which they're great at closing. Like, when you walk into a firm that has none of that, that you want to have the person who's very comfortable going, brilliant, I've done this before, I know exactly where we need what matters first and now, which is a really interesting thing. How are you seeing this part of the industry evolving now with, how it evolved or changed during the pandemic when we sort of went fully remote, and now as we sort of transition from remote to hybrid to back in? Like, what are you seeing that having an impact on talent? Startups are obviously a lot more flexible around that, but what is that sort of driving in your space?
That's a good question. I think there's a huge opportunity for startups in this space, because startups are still probably more committed and comfortable doing remote first. Not universally. I mean, we've definitely had conversations with people that are founding businesses going, we want to create a culture. We want that to be in person. We want to be based in New York or Austin or wherever, London. So I think there's a huge advantage there, because some people are still drawn to that remote first environment. I felt like it was, I don't know what the right term would be, but it was like it was oscillating between 2 points. Everyone wanted to work remote and they loved it, and it was the best thing ever when the pandemic happened. And we were like, why haven't we done this for years? And then people were kind of missing the office, and everyone wanted to go back. And then we've kind of got to this point now where people want to work the way they want to work, in a very individual way. And the challenge to manage that is quite difficult. I think people have made it part of their employer brand, being very strongly hybrid, fully remote, or in person, and it's become rigid. And I don't think that's very positive. And I think the people that are winning are those that are not being rigid. Saying that for some people hybrid is perfect. I think my personal view is, I think for most people hybrid is perfect. I think having a place that people can gather and congregate is important to build culture. I think being able to work from home, it usually means you get a lot more done. I think forcing people to come into work every day is just stupid. And actually, I think you should pay more for that now.
Yeah.
We're now in that world where I'll come into work every day if you pay my train fare every day, and then I'll come in. So it's led to an evolution of all of those things that we've touched on. I do work with businesses now that say, we want everyone in the office, but we're now going to pay for their travel, which is a positive thing. We've led to people losing people because they are forcing a way of working, and they're saying that doesn't work for me.
Yeah.
And so we're just seeing this evolution of employer brand, and that is one of the elements of that. But I wouldn't say there's a one size fits all trend. I think as a general rule, lots of the kind of bigger incumbent insurer businesses are going back to kind of more hybrid, but with a heavy focus on in office. And I think the startup world is more generally sticking to kind of remote, but it's probably because they can't afford fancy offices on Fenchurch Street.
Yeah. Well, and I think companies need to commit and have like coherent strategy. If people want to be fully back at the office, like, that's okay, but you have to be aware now that there are more companies who support remote. And in many ways, I think about it as part of the overall offering. And in the way you'd evaluate any job, if it's a fully at the office job 5 days a week, but they're paying you 15-20% more, like, is that the trade-off you're willing to have? Or alternatively, if you're looking at a role and there's a fully remote role paying 15-20% less, you have to do the math and the calculus as to, is that what you'd prefer and want? And I think the sort of invisible hand of the market will dictate what happens here.
Sure.
In the same way, if you want to pay a grad one price for a job in London, one price for a job in like Leicester, like, Okay, like, but so you'll see a bit of a deviation there, going, well, I'm not going to go to London for that low of a salary, but so then firms in London will pay more, firms in New York will pay more because that market demands it. So I think you'll begin to see that play out, and companies will get what they get. And if they feel they're losing the best talent because of remote, then they might have to adjust accordingly. Or if they lose the best talent because of price, they have to adjust accordingly. I think it'd be one of these same things. Off the back of that, during the pandemic, what we saw was the fully remote part of work massively benefited women and people who have families in a way that sort of have been disproportionately impacted by long commutes and longer days at the office and all these types of things. I know that you have the sister podcast to yours called We Are InsureTech Women.
Correct.
And talking about sort of the importance of equality and the role of women in the leadership role within InsureTech. How are you seeing the strategies being deployed by female leadership and how they sort of attract talent, and how are they leaning into sort of the future of work and these types of things?
Yeah, it's a really good question, because I don't know that it's any different. I just think there's an awareness and there's a transparency around the way things are doing. I think if we look at the way that women, really talented women in the space are analyzing those job opportunities, it's coming back to your point. It's become something that they will, look at the board, and they will look at the senior leadership team, and they will go, does that reflect me? And if it doesn't, we're losing talent. We've had people that we've approached, and this is a business proactively trying to attract senior women into their business. They can't, because the entire senior leadership team is male. So before you get to the metric of what are the kind of work-life balance elements of that, because I don't think it's over-indexing with women more than with men in terms of kind of prioritizing that. I think universally, what the pandemic did was allow everyone to consider their own needs, and in a way that they probably haven't done before. I think it's more pertinent and kind of disproportionately impacts women, because we still have a culture where women will tend to be, maybe kind of work from home, coming back from things like maternity. We're still really poor in the UK at offering paternity. There's still kind of an overburden on women in the workplace to kind of deal with things like that. So that's been helpful in kind of the flexibility around returning to work, and returning to work effectively, I think, is the important thing. I think those things have kind of come to the fore, but I wouldn't say it's kind of over-indexed in the kind of leadership, because we're still probably in a space where the leadership of a lot of these businesses, and I'm probably more talking about incumbents, because I think startups are very different. If we're talking about traditional businesses, we have leaders that grew up in this world. So men and women, the distinction between the way that they manage is negligible. And I think I would reflect the same on the InsureTech industry. I think the InsureTech industry, because it's full of entrepreneurs who think maybe slightly differently, are more likely to think, particularly in the software space, they're more likely to think remote first. They're more likely to think about kind of offshoring, international teams. That kind of mirrors across the piece. So I think women that lead these businesses just think in those terms, but I think that's kind of almost like an early adopter type mentality, which most entrepreneurs have anyway. So I don't think the gap is there so much on the kind of leadership and how they're approaching talent. I think there's more awareness of it, but I think it's more when you look at the people looking for new opportunities proactively, it's become much more important to them. Yeah,
I think on the startup side, you have a collection of people who are running companies who are working from a blank sheet of paper, right? And at every point, every decision, every juncture, they can go, what do we want this to look like, and what do we want to stand for here? What matters to us? And versus when you have gone through the industry, you've always been within the framework. And even if you get towards the top, it's like, here's the tower upon which you sit, right? And there's no environment at all in which you can say, what if we just changed it all? Because you're going to piss off a third of the people regardless of your decision. And startups enjoy the privilege of kind of going, what matters to us? What are the types of things that we want to imbue? What matters for our culture and attracting talent and all these things? And just a freedom that we're afforded because we have that blank sheet of paper. One of the other things sort of on sort of topical reference points, That's sort of most brought up and discussed now is the importance or the impact you might have with AI, the role that that will play, the sort of automation versus human capital,
Yeah.
right? Like,
Yeah.
and there's obviously this piece of it's going to be a tool in which it gives people power to do a greater velocity of work, but at the same time, people are, at least maybe a couple months ago, horrified that all the jobs are now gone and no one's going to work. I'm just going to hire ChatGPT,
Yeah.
right? So I don't think that's the example either. But where are you kind of seeing the impact of that? Are you seeing companies trying to do more with less, looking for a couple people who like? Is that something you're seeing bumping into?
I don't think so much in our direct industry. I heard some horror stories about, you know, the banking sector just cutting marketing teams overnight for people that wrote copy and just said, we don't need you anymore, we've got ChatGPT. And I think we're going to always see that. But when you talk about that, you're talking about cutting entry-level staff into that industry. I think where there's a potential long-term impact is where we use AI tools in such a efficient way that there is a gap about where do entry-level people in the industry come in. Like, where do they learn their craft? Who do they learn from? If a lot of that kind of work is being covered off by AI-driven tools, which are, you know, are going to become increasingly bespoke for our industry, and you know, whether it be underwriting tools, whether it be claims tools, so you won't have this natural progression. But then you flip that and go, well, what can we use these tools for in terms of kind of learning and development perspective? And also, when these tools are there, that just accelerates people's learning. So I don't think we're seeing it yet. I do think there's a potential reckoning in the future about it's more, we might have to invest much more heavily and triple down on our L&D budgets, which I don't think we do very well. I think we've got a kind of a slightly lazy culture in a lot of businesses where it's kind of, we'll put you with a senior person and you'll watch them do the job 1,000 times and then you'll learn it. And I think that won't be enough in the future.
Yeah.
So I think that's where we'll see it, but I don't think the kind of immediate impact of that's being felt.
Yeah. That's certainly one of the big challenges when we have remote. We've been lazy as an industry a little bit, and I agree with that. But there's an ease in which we're sitting across the desk, and in London, is for those who have visited or work in this space, you have those sort of long tables with sort of 6 desks on them, and your laptop's backed up to someone else's laptop or monitor. But in that environment, you pick up so much. If someone on your team is running to a meeting and you don't have a lot on your plate and you just tag along and, you get this exposure and you come out of the meeting, you ask questions around when they mention that, what were they referencing? And you learn this very organic way of learning. I think in our space specifically, if we position it and lean more and more heavily into fully remote, you're going to lose a lot of that. Once that Zoom call ends, that's that conversation done. There's no sort of return from the meeting conversation. And in the same way, it's rare that I'm going into a Zoom call and as I enter the waiting room, I'm like, I should invite some other random person on my team to join because they might find it interesting. Because it's such an additional, like, uncomfortable lift. So I think that figuring out how we develop talent in this space will be really interesting. And there's this idea of it, instead of being like this triangle of talent, becoming more of like an obelisk where it's as narrow at the bottom as it is almost very near the top, and you don't have that pool and breadth of talent you're sort of able to sort of develop up the ladder. It's more of you don't have as much of a pool. They're all forced to kind of climb, but you don't have a sort of structure, environmental framework in which you develop them appropriately at the right speed.
I read a slightly more positive, and it was quite nice. I think it's got to be mentioned because I read quite a positive headline on AI, and it was all about kind of, are we going towards are we going to manage to see kind of the 3-day working week now? And I think that's, and this is a very meta philosophical and probably non-capitalistic point of view, which is really, and we already saw this. We saw kind of automation in the home. We saw kind of an incoming of technology. 50 years ago, the conversation was about, we can just work less and get paid the same. And the technology worked for us. And I want to start having more of those conversations. I'd be the happiest leader of business in the world if we could effectively do our jobs at FinPro and the team worked 3 days a week and I paid them exactly the same.
Yeah.
And I think sometimes kind of the The fear is because we don't think about it in a broad enough construct, and to say actually all these tools that will be incredibly cheap to run, you will have incredibly cheap autonomous tools that will just run 24 hours a day. Then you have people going, well, they don't need to be there, and so this opens up opportunities for job sharing and things like that. And so I think we need to be more creative around that, because maybe that's what people want. So, but I'm aware that's me putting my hippie hat on. I don't know how popular that'll be in the world of reinsurance.
Yeah. That's certainly an angle, right? And we've had it before where in reinsurance you have it where there's sort of the busy seasons and non-busy seasons, and there's always, and I think in any job you have it where there's moments when you're swamped and drowning in work. Other moments you're like, I don't have that much to do today. But as an industry, maybe an industry we're pretty good at it, because it's like pub time, especially in London, right? So, we wrap up the claims on our desk by noon. It's like, well, see you at the Lamb.
Cool.
So it's a reference that our London listeners will certainly reference. But when you have that enablement piece, the other thing that we talk about from our business is you have a pool of talent. You're trying to attract young talent. And in the current environment, they're forced to undertake sort of 40, 50, 60 hours a week. But much of that time, the reason that work is so cumbersome and takes so long is this requirement that, like, that's how long it usually takes to sort of manipulate all of this data in these spreadsheets. And it is a very frustrating experience for people who are super talented and really intelligent. And there's this angle in which if you can take it where like that tedium and much of that like data cleansing or that monotonous work is now something that takes a half a day or a day or something instead, like you can then point them towards at least interesting things. So maybe if we remove your hippie hat for a moment, but if we take away the things that are unpleasant and they're still like doing work, but like things that are interesting, things that might be impactful, things that are a bit more creative or strategic or less like, I spend Friday just entering names into the spreadsheet because that's what my job. If that's already done, what else might we do on the Fridays? And it might be face-to-face. It might be any number of things. And I think that's the thing that will help us attract and retain talent is using technology in a way that enables them to eliminate or reduce significantly monotonous tasks so that they can have things that stimulate them and are, make them excited to go and like to sink their teeth into. So people want to be productive as well. People want to feel like they've produced something of value. They've had an impact. I think that always will matter. But sometimes they don't really get that enough.
And I think it mirrors that kind of that slightly hippie view anyway, because I think what we're really saying is, so let's say the monotonous work was 5 days a week. If we can reduce that to 3 days, what do we do with that other 2? Do we have a Google principle and go, 2 days a week you're going to be R&Ding the idea of our business or something of that ilk? Because 100%, that's why I'm so positive around AI. And don't get me wrong, there's plenty of scare stories, and I love sci-fi and horror movies, so there's plenty of reference points there for when it goes horribly wrong. But I don't really believe that. I think the biggest thing is it's going to take away monotonous work, and every job has monotonous work. And human beings are just not very good at it. We tend to get it wrong because we get tired and we get bored and we get frustrated, and we usually move on because we have too much of that. And actually what we're looking for is something which is either a new set of monotonous tasks because they're interesting, because they're different, or it's to get away from the monotony. So I think AI really is a tool for people, tool for human happiness. I'm going to go that far. Is an incredibly useful thing.
And I think our industry is an interesting one in how they're sort of gently dipping their toe into it. I think certain industries lend themselves very nicely to sort of jumping in with both feet and exploring it aggressively. The way our industry is set up and the importance of information being accurate, again, do we have the piece, especially with generative AI, of it making stuff up. Obviously, it's not going to fly in much of how our industry operates. But the importance of data being correct and accurate, and there is that concern of the black box where it's you send stuff through and machine says X, right? We've all had those experiences where we get frustrated because computer says no. And you're like, oh, it's missing the simple thing I'm trying to give it, and that's immensely frustrating. But when you look at it in the impact that might have in insurance payouts or claim or premium accounting transactions, are all number of things, is the reason you see our industry sort of dipping its toe gently, looking at ways it can extract and simplify monotonous tasks, but keeping the human in the loop in a lot of ways. So we have that lens of going, okay, we know what we're looking for, we know what looks normal, and it's not going to have that impact, and it may be a negative way. But we'll follow the fortunes and the path I think the finance industry sets out. Right? They've been doing things with similar tech for a number of years to identify anomalies and similar.
Yeah, and we touched on, I touched on this in one of my Leadership and Insurance podcast episodes, where we talked about this with Richard from Kennedy's, which was black boxes is generally a bad idea in a regulated industry, but the kind of I think it's the white box where people can interrogate the algorithm and how it works. That's where we need to go, because actually the proprietary side of what we do, risk selection and your portfolio management from a carrier perspective is what we're usually talking about. But everything else, why wouldn't it be able to be interrogated? Because most things are, you're following a function of a business, making a claims decision. It's a bit like using a sporting analogy for the UK listeners. It's like VAR. Where it's going wrong is because they're not letting you listen to the wider decision that's being made. It's like, right, this is what we've put it through. This is the decision, and this is why. Black box is a bad idea, because then it will become this claim is either valid and needs to be paid, or isn't, and is rejected. That's an unsatisfying experience. But I think the realm of AI encourages people to think in black box terms, but I don't think that can be the future in a regulated market.
Yeah. Do you think you mentioned before, and I agree with this the fact that there was a bigger InsureTech bubble, and I think the broader startup environment has sort of seen a bit of a level set.
Yeah, agreed.
Do you think we'll sort of begin to pick back up and gain more momentum in the space? I mean, the investment is still coming in. Early stage stuff is still almost level. So when you look at that bubble, if you will, being popped or whatever, it's a lot of that is sort of in the public markets or Series C and beyond or B and beyond, where the early stage stuff is kind of still playing level. And I think there's still an acceleration of ideas in the market. Are you seeing a lot of things that excite you in the space? Are you seeing it a bit more like, it feels like we're hitting a dry spot? Like we've tried all the things that we jumped out to us initially, and now we're kind of going, what else is there to do?
No, I thought, that's true. Well, there's a few things on this. So I made 2 investments this year myself as an angel investor, and I've not done that before, and it was 2 ideas that excited me, and I think they reflect a theme that I've seen, which is that the businesses getting funding now, I think, have very specific, very discrete solutions that they're trying to solve. And I think a lot of the stuff that got funding before was kind of not necessarily bigger picture, but it was kind of less defined, and it was trying to kind of industry wide solve a problem. And actually, the things I'm seeing funded are solving a very specific problem in insurance, and they're a software platform. And usually they're coming from people that are ex industry who are going, this is a problem, and this is a replacement of a monotonous task, as an example, that needs solving. We've got a solution for that. So I think those kind of smaller, discrete, but they're not the aims for big IPO businesses. They're not. Probably they're acquisition targets, or they're just good standalone businesses. And I think the expectation there is different. I think you're right. I think we talk to venture a lot, and we've had a lot on our podcast. We work with a lot of venture businesses with their portfolio companies as well. When people said, the bubble has burst, I was like, that shows a fundamental lack of understanding about how venture firms work. Yeah. If you've raised $100 million, you've still got to deploy that $100 million, and actually you need to deploy it pretty quickly. So that was always going to come in, but you're absolutely right. Everyone's zeroing in on earlier stage businesses because people got cut adrift, didn't they? The valuations didn't work for anybody. No one could invest in a late stage business at the valuation that founders would be happy with, or the VC would be happy with. So that was the real kind of dead zone, which was really unfortunate. But I'm really bullish about it. But there's a couple of VCs I spoke to about what's the state of the market, and the kind of, no one was recorded saying this, so I certainly won't drop any names in it. But the sentiment was essentially that InsureTech as a industry or as a continuing investment concern needs one of the big insurtechs to have a good public exit at some point soon, and probably within the next 18, 24 months.
Yeah.
That's likely to be one of the risk-carrying entities. They are the kind of biggest ones, and I think if one of those has a sensible, if not kind of spectacular public market event, then I think we're here for forever. But I do think otherwise you're going to see this trend, which has already happened, which is the corporate venture teams are stepping into the gap. Yeah. Because they know where the discrete solutions are, and they've got a two-sided interest. It doesn't have to be the biggest exit if it solves a problem that they have in-house today. So all I think it changes the nature of who the investors are and where their entry point is. But I'm confident. I mean, I should be. My business is built around it.
Yeah. Well, I think as well, we're in this really interesting and exciting space where one of the benefits of having watched sort of things shake out over the last 5 or 6 years is you can look at businesses, and anyone who's aspiring to start a business should be doing this, but looking at businesses that were in your space or adjacent to it, which ones worked, which ones didn't, and really begin to unpick why that was. What were the things that they had done? What were the things that they missed, or strategies or partnerships, or there's lots of little things there. And there's that saying of all happy families look the same, and all unhappy families are unhappy for different reasons. The saying is obviously way more eloquent than that. But this idea that you can die from 1,000 different ways, and like really looking at what were the things, if we're going to try to build a business now, what were, if say it's an MGA or similar, what are the successful MGAs who've kind of come into the market and grown and now have their own paper, or are still using partners or fronting paper, but looking at all the ways you could do it, who else is doing it a similar way, how did they attack a market, and similarly who tried it and is no longer around, and what route did they take, and begin to study that. And I think we benefit now from people who are still ambitious. There's obviously a bunch of white dry powder from the investment side that can go into early stage. So looking at where the areas you want to go are, and thinking through what the opportunities look like and how you might be able to tackle it. Just because it hasn't worked before, it doesn't mean it won't work. It just means it didn't work in that particular strategy. So I too am super bullish. The number of people I talk to who are in the space, who are thinking about ideas, and they're curious about something, they want to have a coffee with me to pick my brain as to what should they do as they're getting started. Like, that excites me, because I think there'll be a lot of really cool innovation coming out.
You can ask for your 1% equity then.
Yeah, exactly. Yeah, exactly. It's almost always true, except when I want the 1%, in which case just give it to me. But no, I'm super bullish on the whole space. And from a talent perspective, I'm glad you are as well, because I think it's going to make an exciting area for us to continue to delve into.
I completely agree. I talk to lots of people who are really kind of invested in new ideas, but I think you 100% correct. I mean, just look at what's gone well, but also question all of that. I think people look at themes, but they don't look at the detail. And you could have 3 cyber insurtechs side by side, and they look externally the same, but they're probably not in any way. And I don't think there's enough kind of granular detail goes in when people are kind of excitedly running at the wall with their idea. So, I think that's the only thing I would say to people is just be super forensic, and you talk to venture firms and talk to kind of founders, because founders are much more approachable. You don't sit in an ivory tower, because you know this. You took the bins out, and you did the hard stuff, and you will probably find time for someone, and I would encourage people to do that.
Yeah, I couldn't put it better myself, and a brilliant way to end the discussion. Alex, thank you so much.
No, thank you.